Hey everybody, great to have you here for the Investing Master Series. My name is Mike Fairborn, sitting in for James Boyd, who is out because his son is getting married. And by the way, I don't feel sorry at all for James. He happens to be in Hawaii right now, enjoying himself, no doubt about it. But good to sit in. I am very much interested and involved in fundamental analysis. And folks, today I wanted to take a look at really discussing value starting at that end of the spectrum, which many investors do, value at reasonable growth. So I wanted to kind of compare those two, talk about some tools to kind of estimate that and look at what that could mean and some of the stocks that come up. We'll look at some stocks specifically here. Did want to say hello to all of you. There are definitely some new names in here in this class, although I do recognize Alfred. So hello to you, Alfred, as well as others in here. We've got Mark, Mario, Josh. I do recognize Josh and a couple of you, as well as Sharon and Dom and others. But welcome, folks. We're joined in the chat too by a good friend and colleague of mine, Barb Armstrong. You can follow us both on X, Barb Armstrong CS, Mike Fairborn CS. Great to have Barb here as well. And with that, hey, I want to dive in. There's plenty to look at here. So let's do this. Let's take some disclosures to get the show on the road. But welcome, everybody. Good to have you here. All right. As it states here, the Paper Money software application is provided for educational purposes only. Now, in case we do tap into it, options carry a high level of risk. They're not suitable for all investors. Information here is for general information purposes only. Now, investing involves risk, including the loss of principal. Past performance, no guarantee of future results. Okay. And let's see, short options can be assigned at any time up to expiration, regardless of the in the money amount. ITM option has a higher risk of being assigned early. Now, there's no guarantee that the execution of a stop order will be at or near the stop price. And with a stop limit order, you risk missing the market altogether. A couple other notes here, because I think we might run into one or two of these in our discussion, but risks of REITs are similar to those associated with direct ownership of real estate. All right, so with that, let's turn it on over into just a quick overview of the market to see where we're at right now as we set this up and take a look at it. Well, the markets, folks, continue to march higher. I know we were down a little bit the last couple of days, starting off, that is, and then we just bounced up. It's just been so strong. And like I've talked this before, this V-shaped bottom has not just continued from a V, we've done another extension of that V wave and still just showing some massive strength. And behind that, we do have also really technology sort of leading the way. That is a bigger V bottom. We've almost got a couple of different V's in terms of an extension there. And one thing I'll note, and you'll see this longer term, and this is really a reflection in many cases of an innovation cycle, a productivity cycle of technology and the growth that is anticipated. We ran it for a long period of time, folks, but on a longer term scale, you have to say this is sort of like a longer term flag pattern, right? A little bit. Can you see it? Sometimes we lose a little bit of track when it really does drag for a long period of time. But if we examine what we'd seen previously over here, yeah, you do get that follow through run. And hey, maybe there's some growth behind it. Now, what's interesting when you look at technology stocks, because I did want to talk, as I mentioned today, finding stocks that have value, but at reasonable growth. That's an important concept to consider because I'll tell you what, if you have value stocks, sometimes if they're value, the problem is they might, one of the big issues is that they always remain a value stock. We don't like that, right? We want to see stocks that are, that have come down and just don't hold here for years. Is it really a value if it always remains low? That's the question. And what can change the dynamic there? Well, what has been making the difference here with a lot of companies? And you can look at these. And I'm just going to throw out one right now. I know I've looked at this stock a few times in my other classes, but as we look at something like Google, which is down today right now, again, I mean, it is down. It's come down a little bit, but I just want to examine like earnings over here, just generally speaking. If we look at earnings, look at the number, look at the earnings right there. 2.63. This is kind of reflective of a lot of tech stocks right now. And we came in at 511. That's a massive beat for a giant company. And they've kind of got AI working on, They really took their AI, which was called DeepMind, and they plugged it into Gemini, incorporated it into their searches. They're getting higher productivity and more throughput, really, in terms of revenue to earnings. You can see that right here. Now, that's an interesting point to consider. This has been happening for a long time. If you look at companies long term and you just check out their earnings. I'll go to a weekly chart here. Google just the same. Folks, what are the chances of this company going up like this if the earnings of a stock have been flat or going down? In other words, what can drive a company that's got a low PE ratio that gives us a sense of valuation? What can drive it higher over time? Well, earnings can play a key role because over time, as a company acquires earnings, just the value in general can go up. And I just want to get to the core basics of this because that's just going to be true with any business. If we owned a business collectively amongst all of us and the earnings were going higher and the company was just getting more and more valuable, our retained earnings, a key word that Warren Buffett talks about a lot. If our retained earnings are climbing over a period of time, what's happening to the business? What's happening to the value? It's just worth more. The markets, although, it's a public market, although it's not perfect, it's a reflection of that. So this is a key point because if we can find companies with PE ratios, which is a very common, I mean, I think it's one of the most common, if not the most common, um, ratio out there. If that's our reference point, what people are paying in terms of price to earnings, if this is in a low range, and that's just kind of, it just depends on what kind of company we're looking at, relatively speaking. It's earnings that can make that valuation go up. And so our emphasis today is going to be talking about finding those, but with reasonable growth. So we want to be able to compare earnings, historical and projected, to the PE ratio and see if there's actually any value there that might lift the stocks going higher down the road. Okay, so with that, I'm going to jump back over to a daily chart here. And what I wanted to really dive into today was uh, getting into the um the the research area within Schwab and diving into the screener here because there's a lot of excellent fundamental information that we can tap into, and I want to do that right now as we start into this concept. Okay. So, and I'll go kind of back and forth between the charts as well to kind of compare a few things. So we're getting some visuals down, but let's do this first. I want to start off with a basic continue session. Okay. Let's go into an index. We'll start off with the S&P 500 initially. Okay, because we want a basket of companies. There's a 503 stocks in there right now. There were some requirements to get in. This company probably has a history of earnings and growth within the business, whatever the case might be. This could be easier than, let's say, the Russell 2000 small cap, although we could run it on that too if we're looking for small caps. But starting off here. So let's do this. Now, I'm going to come down here. I'm going to highlight as we get into this valuation. And this valuation is going to tap in specifically to the PE ratio. Top of the list right there. Yeah, I was reading like years ago, like that this is the most popular financial ratio in the world. I don't know if it still is, but even like in the UK, they have a very similar metric. But yeah, just comparing the price of the company to the earnings. In other words, the PE ratio. If it's a PE ratio of 10, it just simply means, we're paying $10 for every $1 of earnings in the company. So a 10 times multiple of earnings, right? It's an interesting comparison. All right. So with this, the next thing I want to do is we want to talk about, what are we going to select here for this PE ratio? Now, this is an interesting category right here. Notice we've got 10 to 20. This is an interesting range. Now, sometimes if it's below 10, you've got to be really, really careful. And this is, by the way, it's interesting to look at companies below a 10 too, because you can find the needle in the haystack where you're saying, but this might just be undervalued because the growth is there. They might have had a hiccup, but there might even be projected growth higher into the future. Now, I want to pause and just say one thing here. When we're looking at 10, this comprises a lot of different industries out in the market if you're down to 10 to 15. So 10 to 15 is if you think about low valuations or a good value, there might be a lot of companies in a 10 to 15 area. But I want to make a distinction here. And this is what I found over the years. Now, this could vary, but I'm just going to say a lot of different companies might bottom around 20 to 25. And we're not in that range exactly. We could include it out if we wanted to go that deep. I mean, that much further out in the PE ratio. But in my experience, in a lot of cases, not every case, and by the way, there's going to be a ton of variation, but in technology, a lot of times stocks might bottom around 20 to 25 before they take off. And that might just mean value for technology. Notice it's different though from other areas. What could be over here? I'm not going to write them all out. It just takes too long. But I would say something like industrials over here, industrials, materials, um, some of the financials, insurance type companies. They're different. Some of the staples out there, even some of the healthcare companies might bottom in this sort of a range. So, I mean, we're kind of choosing this area that might have combinations of, let's just say, for example, those industries, those sectors, um, in the maybe the 10 to 15 range, but also technology in the upper range of the 20. I could do 25 real easy, but I'm just going to say we'll just use this box for now. And anytime I did want to expand these and make a specific range, just click right here and we could just do in between right there. But I'm not going to do that. I'm just going to choose this box for now. It's just going to be just fine. So with this, we're getting, just a little bit more than a fifth of the companies fall into that category. And we could easily click on view these matches and take a look at it. Now, one key thing as we look at the PE ratio that we really need to hit too, one other concept as I've kind of outlined that is that sometimes, when we look at a company and let's just say the PE ratio is at a 35, important concept we've got to get into. Is this too expensive? What do you guys think? Let me know in the chat. I'd like to hear from you. I want to get your thoughts on this. Is this too expensive? A PE of 35. What does that mean? Well, it might actually be cheap. It's all kind of relative to, we just looked at it on the chart. What could help get the price of the stock even higher, even if we're paying that kind of a multiple in terms of earnings, price to earnings? It would be the earnings. So I'm just going to throw this out here. If the earnings were growing at 70%, which is a big, big number, annually, historically, and even projected to grow at 70% or in that range by a consensus of analyst estimates. It's not a guarantee, but it's a consensus of what they expect. What do we think there? Is it undervalued? It might actually be, yes, it could be absolutely undervalued at 35. So the PE is relative to the growth if we're looking at value at reasonable growth, or in this case, maybe strong growth. So the PE is relative. It's just that, remember, if you're really, really high on the PE, the growth rate that you must get to really make that PE seem there's value there, it's got to be substantially higher. So park that in your mind. Okay, well, with this in mind, I wanted to go over here and look at not our price performance, sorry, company performance right here. I want to compare historical first because we're going to narrow this down. And I promise you're going to get some interesting companies here in just a second. But if we wanted to look at the last 3 years, I'm sorry, I'm in revenue. Don't mess that up. It's just one down. We're talking about earnings growth right here, the last 3 years of earnings growth. Now, I wanted to do this. I wanted to say that we're going to be north of 20. And I'm going to throw a number out here. I'm just going to say greater than or equal to 25. So, do you see what we're doing already? We're saying, at least on a historical basis, PE ratio 10 to 20. And I could knock this down to 10 to 15 if I wanted to look at that area, or I could even bring it up higher to a higher growth if I was looking at technology. But just broadly speaking, if I wanted to say now 25, we're saying PE of 10 to 20. All right. That's what we're paying here. That's what we're getting. And I'm just going to put this over here. We'll split it right in the middle. We have a PE ratio of 15 over here. Well, with that, if our historical last 3 years growth is 25, this number on a historical basis is going to be less than one. In other words, folks, do you see the value? There's actually value right here if you look at it. We're paying 15 times earnings. We're paying 15. That's the PE ratio right now on current earnings, trailing 12 months of earnings. But the growth rate is 25 over the last 3 years. That, what you're looking at right there is the potential for value. You're looking for maybe somewhat of a, what could have happened on the stock chart? Secular decline for some reason. It just might be out of favor, whatever it is. But if you start to see something like this and it starts to break up higher, I'm just looking at the stock chart. A lot of traders could say that could be a positive. But there's one key caveat here, and we want to add that in next. And that's also going to be, what is the projection going forward? Because for the last 3 years, the number, the earnings could have been strong, 25% or higher, right? That's not the limit. It could go higher than this. But what if in the future it's expected to go lower? Have you ever noticed how stock prices can anticipate um, earnings going lower? Because it is forecasted, it is estimated on conference calls, etc. But what if that projected number is set to stay in double digits? Projected number of earnings. Earnings projected is expected to stay flat or even increase. Now there could be even more value if the PE ratio is at 15. In other words, we could see the price of the stock may be lower, but there could be a key fundamental driver in here called earnings, right? And now the expected price of this could be going up into the future. That it could be anticipated because that PE ratio is going to continue to stay relatively low, even as prices go up, relatively speaking, because earnings is climbing. So even the PE ratio could still kind of moderate and really kind of stay at a low end while prices are going up. I'm going to share with you a PE ratio on the chart so you can visually see this. But before I do so, let's just take a look at these matches right now. Let me just see what we've got. So these are some of the companies. I want you to get a comparison here so you guys can kind of check these out and understand what's going on now. As we line these up, earnings over here, trailing 12 months relative to the earnings growth rate history, earnings growth history over the last 3 years. This is the difference. This is why we put this in motion so we can take a look at this. But look what we've got here. So some of these companies, yeah, PE ratio 14. I mean, more than double that number we've seen in terms of the historical growth rate. By definition, on a historical basis, undervalued. But we want to check out what the projected number is too. Okay, this company just got bought out. I'm sorry, it didn't get bought out yet. I'm just noticing this one. This is NEE, Nextera, put a bid in for these guys to purchase this. We don't know if it'll go through, but it is a bid, whether it goes through or not. But was there undervalue here? What were they focused in on? Well, maybe there's an earnings aspect here that's interesting. If companies stay too low, they become sometimes buyout prospects as well. Now, for a while, I was kind of wondering why Delta was showing strength due to the fact that oil prices had been showing really quite expensive, and that weighs obviously on any transportation company. But look over here. This is Delta right now. These are the current EPS, just about 12, you know. But look at the growth rate that we've seen in earnings. Again, earnings, the driver. We are exploring earnings right now. It's here. It's the PE ratio. It's this earnings. It's the same one. This is what it's been the last 3 years. It tells me something. Earnings have been going like this, and the stock price has been going. I mean, okay, maybe not like that high, but earnings have been up, you know, and the stock, generally speaking, hasn't been going up as much. That will keep the PE ratio lower. Let's put in some stocks real quick so we can see this. So let's go into Delta right now so we can make just a quick comparison. So here is Delta. So the one thing we have to say is all else equal, we've been getting some strength in terms of the earnings of the company and potentially even the prospects going forward as well. Okay. Well, it's been showing strength. Here's a weekly chart. For a while, it had been flat. Remember, we were looking at a 3-year time frame. But if you look at that 3-year time frame going back here, so let's see, there was a lot of, even through here, a lot of sideways action. I know we did, well, we broke up over here, we came back down, but prices kind of flat as earnings were increasing, pushing the PE ratio lower. What happened to the stock price? Oh, it's not perfect, but that's where technical analysis could help us out as well. Let's jump back here and take a look at something too. So I wanted to go over here and we want to take a look now. Um, and that was just one example. I just did that kind of on the fly here as we're looking at it. We've got others in here. T-Mobile could be an interesting one to take a look at too. Um, let's just do that real quick while we can see it. Sure, let's go weekly first. T-Mobile. Okay, so where's maybe the value in T-Mobile? Prices have come down a little bit. What have been those earnings? Okay, so historical 3-year earnings, 61% a year, each and every year for 3 years. Okay, that's the average. That's the average of those 3 years right there. So could there be value here? And by the way, this is, yeah, real close to 20. So just under 20, but it did just barely make our parameter here, or our filter. Okay, so what we're seeing, stronger earnings here, folks, on the chart, as you can see, as prices are going sideways into a range, just picking up on other factors here. Could we be finding like a, sort of a bottom range in here? It's the question. If we start to break out of this range, do we have earnings to push us further? Now's the time we want to take a look and get a reference on projected numbers. So what about the projected earnings going forward? We have it right down here. Just go down, 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 right under history. What we're really looking for here is the current fiscal year and what our numbers look like relative to the next fiscal year. Check the box. Now, what I'm going to do, I'm not going to put a criteria in here. I just want to see where the number falls. Let's click apply and let's see what we're getting because sometimes there are good explanations for it. Why is the PE ratio lower? So PE, right? PE, history, H for short, and estimate going forward. Okay, AIG, PE at about 12. If we're looking out into next year, now last 3 years, 33%, substantially higher, but look at it dip back down to a lower end of the range. That's the estimated number. Now, a lot of times stocks, this estimate in terms of projected earnings, it leads stock price. Not in all cases, but it can lead stock price by about 12 months. In other words, this is a leading indicator. Estimated earnings, oftentimes more on the established companies, the kind of companies we'll find in the S&P 500, will oftentimes be a leading indicator of share prices going forward. Quick comparison. We just looked at AIG, okay, insurance company. We talked about that. That was in one of the lower categories that we've discussed previously. Let's just look now at Delta as a comparison, because I just noticed the number over here substantially higher. Major double digits. Are they very similar to where they were 3 years ago or the last 3 years? Absolutely. 45% expected earnings growth out to next year. What did we just say about pricing? in terms of estimated earnings. They can be a leading indicator of prices 6 to 12 months, is what a lot of analyst institutions will say. 6 to 12 months in the future. Do you see reason why now this could be of interest? Right there. So maybe that could be something that it could be a driver going forward. Totally different from up here. This sunk, okay? This sunk, not down here with Delta. Now we have a reference point, and this can be very, very helpful if we're trying to find a trend that we think might have something more to it, more strength down the road. Now, I'm not saying this at all either with Disney. Disney had shown some really good growth here, but now we're into just barely, but we are moving into the single digits. Think about the driver on the chart. Question mark. Does it have to be? No, but oftentimes it is. Okay. Okay. Let's see. What was it? Hmm. Insight. Okay. So Insight dropping quite a bit, but you'll notice Insight is still, I mean, we're just under 20%. That's not too bad. What this tells me, that's a really low PE ratio. Key point. There's so many key points here, you guys. I got to hit them though. This is really, really important. Insight 13.51. This is a pharmaceutical company, a biotech company. Like technology, it can have strong growth rates. Do you know what can happen? Sometimes if you had really solid growth, you might see something like this. Now, this is going to be a fun comparison. We're going to look at the chart and just see how it kind of did. But here is your PE ratio. Let me just click one thing there. There we go. Okay. So with the PE ratio, it's at 13.5. If you had really strong growth for a period of time, you probably shot up a bit. But if there's expectations that that earnings growth is going to drop into the future, prices can overcorrect. That is dip a little bit further down away from these. And a lot of people get out. And then when the trend gets into a downward trend, it just keeps on falling and falling and falling a lot of times until there is value and change colors here, growth. That's not easy to see. The yellow, growth over here. There's growth. Still double digit, higher double digit. I mean, you're almost at 20%. Let's pull it up right now to take a look. Here is Insight. INCY. Okay. We pulled back. Um, it's somewhat similar. I would say this though, there was some really good growth over here, definitely over here. This is a longer term chart. Wow, very long. But we began to actually break higher. I mean, anticipated, double digit growth, but maybe a little bit, maybe we potentially came down here. We did on prices. But could this be a reversal of a longer term trend? I mean, this is something to kind of consider here. And what does that growth continue to look like? If anything else, guys, I just want you to be focused in on some of these growth numbers and key in on that projected growth as well, because that can be very, very helpful. Now, analysts, where do they get that projected growth from? Can it be a useful number? On companies on the S&P 500, they'll oftentimes have analysts that are, I mean, you might get like, more than five plus analysts. Now, if you're on a small cap stock, it's not unusual at all to get one analyst. But if you're getting five plus, and this five can be like 5 to 25, or what I mean, it can be a huge number of analysts, you're getting a consensus estimate. And they get a lot of their information right from the conference call. So they're getting it a lot of times from the executives of the company, what they're seeing. This can be interesting. Now, this stock, by the way, a strong upward trend, and that's a really, really, this is a weekly chart, so a big run up, but could there be value here if that trend does reverse? It's not a great time right now for these stocks because, well, what's been going higher? Technology. Healthcare really hasn't been doing great over this time frame for sure. But there is that biotech component. But I'm just going to throw that out there. I mean, maybe healthcare does bounce back or something. But what you do, what some traders would do is they would look at longer term support levels for potential technical bounces off these levels for high value indications that are coming in with the chart in here, right? For Delta, I want to look at Delta again, DAL. This is, I know it's in depth there, but there's no other way to explain this except to hit the fundamentals. Um, but look over here with Delta. It was interesting. I mean, we've got this right angled triangle in here. You see it coming up higher lows clearly. We broke above the range. That's sometimes often, can be, from a technical perspective, an interesting time because you're getting higher low, higher low, higher low. Bam, you exceed that level and you really take off out of range. So yeah, maybe there could be something else behind this. Okay, that's a lot of information. I want to go back to this though and take a look at just see what else we've got in here. So Lowe's, for whatever reason, we don't have a projected number coming up. I guarantee you there's probably a projected projected number in there. T-Mobile, very, very similar to what we just saw on Delta in terms of, hey, maybe it's a little bit lower than the historical, but does it still have double-digit growth going higher? Insight too, right? But yeah, same thing. I mean, we're down here into 20. It was really high historical growth. But now, I mean, there's still good projected growth going forward. What do we think about this value? Quick note, let's pull it up right now just to compare. Um, Go TMUS, T-Mobile. Okay. Well, it has been down coming back from higher growth rates, and that kind of is what I would sort of anticipate just looking at earnings. It was really strong over here 3 years ago. And what did we do? We broke above a range. So earnings probably had a dent on this stock, but they have come back down right here. But there is a support level here. Very interesting. Will prices hold here? It's expected to grow at, what was it saying? 28+% or so earnings. Could that be enough? Did the valuations drop enough? Well, the cool thing is we have a ThinkScript to help us see this on the chart. And I'm going to pull it up right now so we can all see it. It's a historical. I'll share it with you. Now, ThinkScripts aren't guaranteed for timeliness or accuracy, but we do a lot of these in the ThinkScript class on Friday. It's a historical PE. Let's go to the next level of understanding this right now. This has to be used on a weekly chart here. Okay. I want to highlight something here for you. And that is this, the PE ratio as it stands right now, okay, it's very close to what we just looked at. What did Schwab come up with? There's a slight variation. I have no idea why, because I thought we were pulling from the same data source. But the PE ratio about 1985. Of course, the prices have moved a little bit, but 1977. Let's bump this up just a little bit so we can see it a little bit more clearly. We're getting now a historical metric of that PE ratio so you can see it. Folks, is it towards a lower end historically where we've seen prices kind of move a little bit? Well, 20, yeah, kind of, but we've held this up. This is really throwing things off. So I'm going to go ahead and just jump in here and give you the last year because that just threw that chart out completely. Now, do you see it a little bit better? Where were we at previously? Prices hit about a PE of 30 range, a PE of roughly 30. Now we're down into this lower area. Um, Earnings have been moving higher, and that's why the PE ratio is still at a low level. Okay, but prices have dropped, and they push that PE ratio to a lower number as well. But look at this: when you dip to these lower levels on the PE, we might be finding some value over here. See this down here too? It did jump up a little bit. We're at the same price right there. The PE level, PE is actually at a slightly higher level here, but we're still kind of in a historical range where the PE ratio has been roughly around 20. Now, what did we just do? We just looked at the historical, the projected earnings, and it could go up higher into the future. But we're saying, yeah, there has been a tendency to kind of bounce around these low PE ratios. And by the way, also conversely, there's been a tendency to top around 30-ish, 30 plus. Come over here. with this. I'm going to go all the way back into a different range. Let's do this. Now that we've got this, okay, it's all messed up now. So I got to jump back in and just pull up something. Here is, we'll just draw a stock here. So T-Mobile, I don't know what's going on. Oh, maybe I went back a little bit too far. That's okay. Let's explore this area over here and just see what those PE ratios were as well. There was a period of time where we dipped all the way down to 10, but look at this range. This is right at that 20 number where we're at right now in terms of T-Mobile. This is what I would kind of anticipate to see on the chart too. Historically, that looked to be an undervalued level as well. Just trying to find value on the chart. Look at it go up. Okay. We're trying to spot here, folks, a level where prices, there might be value, but with reasonable growth. Did we climb outside of this range? We did. By the way, you know what else probably happened over here? Earnings accelerated higher too. It pushed that PE ratio higher despite even prices going up. The PE ratio still went up. There was just an anticipation for better and better earnings, and we saw it right there. But just doing this on the fly, right? We still kind of match where we are. I've got to look at the chat here. Thank you, Barb, for your help on this. But going through this, you guys, there's a lot to take a look at. Let me just share it right now with you. So you have this, but it's a great little study to go back and to look historically at these companies. In fact, I'll just click on it right here. Again, ThinkScript's not guaranteed for time to accuracy. This is one we did create in the ThinkScript class that we do on Fridays. If you guys do have interest in fundamental stuff, there are quite a bit of fundamental indicators in there. We did one on an earnings line as well on the chart. We put an earnings line on the chart, so you can find that in those studies too. But I'll just share this. If you don't know how to, here we go. So historical PE right here. I did a mini session on this as well, so you have it. By the way, just take that, copy it. What you want to do is copy it, come up top here into setup, open shared item, and just simply Control V, paste it in there, hit preview. Folks, name it what it is, though. This is the easiest way to find it in the future. Historical PE. By the way, you're going to want to use this on a weekly chart. Okay, hit historical PE in there, and then what you're going to do is find it over here. So click in Edit Studies, just like any indicator, and type in historical. There you go, right there. Now, you guys, I also have well, I'll highlight this just so you all have it here to kind of take a look at. In fact, I can't do that just yet. By the way, if you're getting value out of this presentation, smash that like button. Lets us know that you are getting value. Be sure to follow us on Trader Talks on YouTube. I'll pull that up right now so you can see that. You got it over here. There's JB right there. There's Barb. You can scroll down into playlists right under here. And Barb's got a lot of great classes. Of course, JB's class here, his Master Investing Series playlist is here. I'll have that in the description section down below for you guys. I did this. Hang on a second. Where is that mini session? It's not good. Well, hang on just a second. I'll just do this. Historical PE. Historical PE. To show up. Yeah, it was right there 10 days ago. If you guys want to see this, I'll put it in the chat as well. If you want to check it out. I went into more detail on this PE ratio. It was perfect for this class though, but there it is right there. Also, let me just put this in here too. The earnings line. This was an earnings line. Oh, it's not going to show it. I guess I did one on there too, but you're going to find it under here. If you like to see where earnings and you like to see it on the chart, I'm going to put it under this playlist right here so you've got it. But this is the ThinkScript playlist earnings line. You'll find it in that discussion in there, but there's the playlist. There's just going to be one of those in there without diving into it. It's right there. Okay. So this is really fascinating to take a look at, but you can get a lot of really great insights by using this too, based upon the information you got. Because now we've got that we build up in our discussion today. we build up the combination of finding value, right? Value at a reasonable growth rate. And so we used historical, HIST for short, historical EPS, not to mention, not to mention projected EPS as a guidance going forward. And again, a lot of analysts will say, and traders will say, hey, you know what? This is that projected EPS, 6 to 12 months. It will lead. In other words, it's a leading indicator. So you'll probably oftentimes see, the stock move up 6 to 12 months before the actual earnings come in. And that's because in many cases, it's the projected earnings that are driving it higher. And by the way, it's not PROG, is it? It's PROJ. Yeah, that's obvious. Projected earnings. And projected earnings are just that. They're not guaranteed to happen. But sometimes if there are historical earnings that have already happened, some traders will say if they can meet those levels, maybe they can do it on a projected basis going forward as well. What I hope to do is create a think script that goes through and actually kind of spits out some of this information for us and says, you know, it has had its historical growth rate higher than the PE ratio, and it's projected already higher. So notify us on a column if that's the case. I'm working on something like that. I can work on that. I've already looked into it a little bit, but that could be interesting for a ThinkScript class going forward, folks. But utilize this information. But we took a look at that, and then we also compared that with earnings growth going forward. And the last thing we did is we wanted to compare where does that PE ratio bottom on a stock, right? In fact, if I just go over here, shorter term, just make it shorter term even. Take a look at something like a Delta, a Delta Airlines over here. And we're looking at a PE ratio. Let's see, 13. How do we have this over here? Let's just look at PE ratio, 11. So it was close. This is a little teeny bit higher over here on our weekly PE ratio. Let's back this out just in the last minute or so. Um, Yeah. So if earnings continue to climb higher, that can push us out of our number here. Again, tying this into the chart, finding these longer term sort of comparisons on the chart can be very, very helpful. Folks, you can use this on all different kinds of companies and different setups. For example, I just threw out this on Apple, which happens to have a higher, it's a tech stock. Use this projected PE number now that you have this idea going on behind the scenes, use it frequently. Look at for example. Where did Apple bottom? A couple of times we hit a PE ratio right down here. Where's that range? Between 20 and 25. Go back though and compare this historically and see if you get other hits on this too. Is that all I've got? I thought I had more saved in here. Sorry. 10-year. I was just going to do this as an example. You can take a look. See right here, higher growth rates. Historically, it was even at a lower level. Wow, this really jumped down. I tend to use maybe a 5-year just to kind of give us a comparison. But over that time frame, this was kind of really the low. And the high range has been kind of where we're at right now, closer to 40. Look at this. We bounced off that level right there when the PE was that number. We bounced off that level and off that level again. Where do we come down to? 20 to 25 range on the low end. All right, everybody. Hopefully that was helpful. Have a great rest of the day. Thank you, Barb, so much for your help in the chat. Spend a lot of time just doing discussions on here. Got to do that sometimes with fundamentals. But folks, James will be back next week. Look forward to future discussions. Take care, everybody. Bye-bye.